This is brought to you by John Daniel and Partners LLP.
My name is Frida Mbabu. I work at John Daniel and Partners LLP. We are an audit firm based in Kilimani. Welcome to our today's webinar. The topic is the key tax developments in Kenya. We will be looking at e-teams and then the tax amnesty and mention about the affordable housing levy, and then the transitioning from NHIF and other key updates in the tax world. I know this is a very interesting topic, not only to SMEs, but also to individuals and companies, even major companies. So yes, welcome. Our speaker for today is John Bumbi. He is the head of the accounts department in our firm, and he will be guiding us through the session. If you have any question or any issues of concern, feel free to raise it in the chat section. Yes, and then at the end of the presentation, we will give room for questions. So yeah, I'm hoping we will have a wonderful time and everyone will learn. Thank you. Over to you, John.
Thank you, Frida, and all the participants of this webinar. And Frida, maybe you can confirm if I'm audible. And if you can be able to see me, at least for now, for introduction purposes.
Yes, we can see you and you're audible.
Yes, thank you so much. So I take this opportunity to welcome you all into this webinar. We want to look at the various tax developments that have come into effect recently and which have an impact to our businesses, even at a personal level. So I welcome you so much into this webinar. I hope we'll be able to learn and interact. I know this is a very broad area because there is so much to cover, but we'll try to get the best out of it within the 1 hour that we've been allocated. So I'm going to switch off my camera for purposes of quality of my voice as we continue. Recently, we've had several updates on tax in Kenya, and they've been cross-cutting from companies, big companies, to small businesses, even at individual level. And that's why we thought it would be good for us to give an update and also pass that information to the SMEs so that they are able to plan well, and also they are able to comply with these regulations. Our presentation today, we are going to cover a few areas, starting with e-teams. Then we are going to look at tax amnesty. We are going also to shed some light on affordable housing levy, updates on NSSF and NHIF, which now is about to change into SHIF. And we're also going to look at other related updates in that line. To begin with, maybe we can look at the history of e-teams and the why. You may notice that there are countries, both in Africa and globally, that they have already implemented the e-teams. So Kenya is not the first country to implement this. And our journey began in 2005 when the then president, Mwai Kibaki, his government introduced the electronic tax register, which was just a manual record. tax invoices. And that was to enhance, of course, tax collection and also compliance. And later on now in 2022, there was an introduction of tax invoice management system, simply referred to as teams. And this was just to enhance ETR, and now to make it more robust, in that now the KRA had a way to enhance compliance amongst the taxpayers through the use of now somehow an electronic means, because you realize ETR was just a manual way of recording those tax invoices. And now, due to some gaps in the teams, in 2023, now the current government introduced the e-teams, and like we shall see, e-teams now is a more robust system, and the major difference between our e-teams and teams is that it has a functionality to manage your stocks. So the KRA are able to view your stock levels, your purchases, and that helps them so that when you are declaring your incomes at the end of the year, your sales, they are able to validate that information against what is already in the system. For example, you cannot say you sold, you began the year with 500. We can take, for example, maybe you are a hardware that sells iron sheets. So maybe at the beginning of the year you had 5,000 iron sheets, and then at the end of the year you have just 500 iron sheets. So that means you have sold like 4,500 iron sheets, and that should match your sales. So you cannot now at the end of the year declare that you have sold 3,000 iron sheets when the stock movement shows otherwise. So that's the importance of that. And we may need to ask ourselves, why e-teams? Why is the government so focused in implementing e-teams? And we have seen the journey right from ETR to teams and now e-teams. Why e-teams? And number one is because of the government wants to enhance how it tracks your expenses. And also, it is also very important for an SME, for a business, to be able to track the expenses in such a systemized manner. Because traditionally businesses used to rely on the principle of all the expenses being wholly deductible. But now with e-teams, all expenses that should be considered for deductibility when you are declaring your income and income tax at the end of the year, they should be generated through e-teams. So that means that at any given point, when you log into your iTax, you should be able to see those invoices that you have transmitted through e-teams. And at any given point, the KRA are able to view and assess your purchases, your expenses that you have passed through the e-teams. So it enhances how you track your expenses, and also it enhances how the tax authority views the expense or tracks the expenses. And it is good to note at this point that any business expenditure for this current year, 2024, from January now to December this year, 2024, any business expenditure that will not be supported with an e-teams generated tax invoice. It shall not be allowable for deductibility when we are computing the tax for the year. So it's very important, even as we go about our normal business operations, when we deal with suppliers, when we are making some purchases, we ensure that we are dealing with people who are already onboarded on e-teams, so that at the end of the year, when we are calculating the tax that we are supposed to pay, we are able now to claim those expenses. I hope we are clear up to that point. Number two, on why e-teams is very important, like I had mentioned, it is the functionality of stock management. So even at a business level, this system allows you to track the movement of your stock. And also the tax authority, the KRA, is able also to view how your stocks are moving, right from the point you purchase them to the point that you sell them, so that at the end of the year, when you are declaring your sales for the year, they're able to validate that. The other benefit, still on this point number 2 on stock management, is the visibility. The visibility that now the tax authority is able to have when now you are onboarded on e-teams. And I think we have explained that they are able to view at any given point your stock levels, and even at your individual level as an organization, as an SME, you're able to view the stock levels of your organization. And this one is very key because without being keen to comply with the e-teams protocol, you may find yourself in disputes with the tax authority. We anticipate that maybe in next year, we may witness several maybe tax audits, several disputes between businesses and the KRA, and mostly because maybe businesses may have not complied with the e-teams protocol. So to avoid that, it's very imperative at this point to ensure that our businesses have onboarded e-teams to make sure that we remain compliant with the laws. The other reason why e-teams, it's very important to government and also to us as SMEs, is because we are able to have a real-time tax monitoring, that is for the tax authority. And they're also able to assess the tax right from the platform, from the KRA iTax platform. So since you are submitting your invoices through e-teams, that data can be seen in real time by the tax authority. So they are able to tell, they are even able actually to predict the much that you should be able to remit at any given point. You see, traditionally, the tax authorities used to wait. They don't have the visibility. They had to wait for some specified period for the data now from the businesses to be uploaded into their system, to have that advantage of viewing the much that they should expect from the taxpayers. But now with e-teams, now there is that real-time tax monitoring and also automated assessments. The tax authorities, they are also able to reconcile. They're able to reconcile the tax that you will be able to declare at the end of the year, and now the tax that already they can be able to deduce from the records that they already have with the help of e-teams. And even at business level, now with e-teams, it's possible now to estimate the corporate and also the installment tax. So installment tax is the tax that the businesses, there is that window for businesses to pay installment tax. And installment tax is basically taken at 110% of your previous year tax obligation. For example, if your tax for last year was 100 shillings, so you can project that this year your tax will be 110. And in that way, now you are able to pay quarterly. You can pay that tax quarterly, every quarter, so that now the tax authority doesn't have to wait until the year has ended for you now to declare and remit the whole of that year's tax. So with e-teams, that becomes very easy, because you are able to accurately tell the amount that is due to the tax authorities. Number 4 is automated audits and validation. I just mentioned that maybe sometimes next year we may witness some heightened tax audits by the Revenue Authority. Sorry, and now this is where it now comes in, because it promises to streamline those audits, because now the tax authority will have all the data. They will have all the data regarding to the tax that the taxpayers owe the authority. And so it behoves the SMEs, the organizations, to keep very good records. And I want to emphasize that, because now records will be very important. Because when you are in a dispute with the tax authority, it is you to prove. The burden of proof lies on you to prove otherwise what the tax authority they are saying. If they say you owe us 500,000 as taxes, it is for you now to prove otherwise. So if you don't have proper records, that one is going to be very difficult for you, and you may end up paying the much that they are asking for. So at this point, it's important to put more emphasis on the organizations keeping very good records, so that in case of any dispute, it is very easy now to prove your status as to why you should remit the much that you have remitted as taxes. The other good functionality about e-teams is because now e-teams, now through e-teams, it will be very easy for the Revenue Authority to validate the VAT returns that we declare. So you remember that through by having the tax invoices go through the e-teams, that information about even the VAT that you should pay to the tax authority, it is remitted together with the information in the invoice. So the tax authority, they are able now to validate the declarations you make about VAT, that is the self-assessment, versus what is already in their system, the data they have. And through that now, it is very possible to have accurate tax filings, and also reduce the instances of dispute, because the tax authority is able to validate that at that point. Number 5 is about still on the VAT process. You realize that currently any business that has a turnover of over 5 million, they're supposed to be registered for VAT. But now through e-teams, when you transact through e-teams, even if you have not gotten to that threshold of 5 million, the time you reach that threshold, e-teams will automatically onboard you for VAT registration. So that's the other advantage, because previously you needed to monitor your revenues, so that when you hit the 5 million mark in form of turnover, Now, at that point, you would register for VAT. But now with items, that will happen automatically. So that's a huge advantage to businesses, because you may need not to worry that you have not registered, because the system will automatically register you for VAT. And that way, the registration process will be very much simplified. There are some exemptions to items. A lot of people have been asking, there are some expenses that you incur as a business that you are not able to get the tax invoices through items. So the law as it is provides some exemptions, and this includes personnel emoluments, which is salaries, imports. You realize that imports, the levies that are associated with imports and the taxes, they will be declared. They will be declared in another format. So that one will not be included to be taken through items. The others include investment allowances, for example, the wear and tear, the industrial building allowances, and many others. Others include airline tickets, interest for financial institutions, and maybe sometimes the commissioner may give other exemptions as they may deem necessary. So besides these ones, all the other expenses that an organization incurs should be transmitted through items. And that is very important. We want to ask ourselves, how do we now, we have talked about the importance of items. How do we ensure that now we have onboarded items? Onboarding on items lapsed. The deadline lapsed on 31st of March, 2024. So I believe it is still ongoing, but now there are some small penalties for late onboarding. But we can look at the steps that you need to follow when you are signing up. So you first need to sign up on eTeams taxpayer portal, and you will be able to do a service request of the appropriate software solution. We'll be able to see later in another slide the different software solutions that are available. Then after you have submitted your request, you are going now to upload some documents for purposes of that application. And this includes the commitment form. You will get it in the portal. We have the application letter. We have the CR12 for your company, and an ID of one of the directors. Then after that, you are going to submit that application, and you are going to, because you will also register your email address and the likes, you are going to get communication with regard to the approval of your application. So from there now, you can begin to if you are dealing with merchandise, if you are dealing with stocks, now you can proceed to register the merchandise. If you are doing if you are in the service industry, now you can be able to transmit the invoices through the items. And before that, you may need also to train on how to use the systems. KRA provides a very good training materials from their YouTube, from their website. So that will be very key for you to be able to do that. We also, as a firm, we are also assisting businesses to do that, of course, at a small fee, to onboard on eTeams, and also training them on how to navigate through the system. So you may need to reach out to us in case you need assistance on that area. So besides the eTeams update, we have other updates that are also related to to taxes. And this one is on e-filing of the VAT returns. So KRA introduced something they call the pre-filled VAT return form. And the objective was to just simplify how we file the VAT, especially for those that are registered taxpayers, the taxpayers that are registered for VAT. And this functionality, it mainly utilizes the information that we have transmitted through eTIMS to KRA. So it takes that information and populates in that sheet. And now the accountant or the person who is in charge of filing the returns for the organization, what they need to do is just to verify that the information that is contained in the pre-filled forms or auto-populated forms, it is accurate. So then after that, you are able now to submit the same. So meaning the developments that we are seeing from the tax authority, much as we may see them as complications or adding some more weight to our businesses, they have that positive element into how we do things. Since now we'll be able to submit our VAT returns in a more efficient or an easy way of doing that to be achieved. The other update is on the fringe benefits, and fringe benefits they relate to loans that an organization or a business may give to their employees, their director, or even their relatives to their employees or directors, normally at a slower rate, at a lower rate than the market interest rate. For example, the interest rate may be 16%, like we can see in this public notice that was issued by the KRA. So the market interest rate for the months of April, May, and June this year is marked at 16%. So if an organization gives an employee some loan whose interest rate is below the 16%, that is considered as a benefit to the employee. And as such now, that's where the fringe benefit tax now comes in, because now the employer is supposed to remit a withholding tax of 15% of the difference. So, and the same should be remitted to the commissioner by 20th of the following month, just like we do for the VAT. So this is very important to note, because it has some implications, especially on the small business, on the employer, in this case, the small businesses. We can try to look at the available solutions on eTIMS. We have different versions. We have the one that you install into the your machine, and mostly this one is for those taxpayers who deals with merchandise. They are selling goods from one location and from one pay point. So like we saw, this version has a stock module, so you're able to track your stock levels and the movement. So that one is for one pay point. We have another one for multiple pay points. It is just the same as the first one, but now this one has that functionality of multiple locations with one pay point. Then we have another version called the pay point eTIMS. This one can be installed in a tablet with an Android version and above, and it also has a stock module. We also have the online photo eTIMS, and this one now is specifically for those taxpayers that are in the service industry. They can be consultants, they can be schools, for example, hospitals, those that deal with the service. So they are able to log into the portal and able to transmit their invoices through the portal. Then we have what we call the virtual sales control unit and online sales control unit. This system, it's very good for purposes of integration with the ERPs or the systems that the taxpayers have. So you are able to integrate your system with now this version of the eTeams, so that now whenever you make some transactions, some purchases, the system now is able to pick that purchase and update it now on the items. Then just recently, KRA came up with another version that was aimed at netting the other businesses, mostly the ones that are not registered for VAT, like farmers, the Juakalis. You see, the people who are not in the formal businesses. They came up with a version of eTeams called the eTeams Lite, and there are two types. There is one that is held on the web, and there is the other one that supports the USSD functionality. So for the one on the web, you just need to log in into the eCitizen, and then you are able to transmit your invoice through that platform. So the other one is on USSD. You can use your just the normal phones which are not smartphones. I know we are used to call them kabambe. So you can just dial *22 *2# and now you are prompted on how to record the details of the invoice and then transmit that. So that means when you do that, that invoice information is already now transmitted through eTeams and the records are there. So it's now for us businesses to assess and decide. I know at this point there are many businesses that have already decided and onboarded, but for the ones that are yet to, it's important now to decide which solution perfectly fits your business. Having said so, we want to look at another update, which now relates to tax amnesty. This tax amnesty was supposed to run for, I think, 9 months, 10 months, from September now to June 30, 2024. And the government, it is not the first time that the government is giving some waivers on the taxes owed to it by the taxpayers. So the government is stretching that olive branch to taxpayers, and it's telling them it's willing to forgive them their extra sins, especially on taxes and penalties for the principal tax owed to the tax authority up to 30th of December 2022. So for 2023, that one is not applicable. But for all the taxes, the principal taxes running up to 30th December 2022, all penalties that relates to those tax amounts, they shall be waived within this period. And that is, of course, if you apply and you are able to give a plan on how you are going to pay before the period lapses on that year of June this year. So this amnesty was introduced last year for the current financial year through the Finance Act of 2023. Like I mentioned, it was supposed to run from 1st of September last year to now 30th of June this year. It's good to note that the waiver is only applicable to penalties and interest, not on the principal tax. So it is only applicable to penalties and interest on the unpaid principal tax that was due to the tax authority by 31st of December 2022. Of course, with the condition that such unpaid principal tax will be able to be paid before the waiver period lapses, that is on 30th June 2024. Having talked about the waivers, we may need to get clarity on other updates that affects our businesses, mostly on the statutory deductions. The first one is affordable housing levy. This is something that has elicited so much reactions from the Kenyans. I know it is not still settled amongst many people, but it is the law. As we speak, it is the law because the president assented to the Affordable Housing Bill of 2023 on March 19 this year. So, meaning this a law now that we should endeavor to comply with. And the contributions that relate to this levy include 1.5% of the employee's monthly salary, gross monthly salary, that is from the employee side, 1.5%. So if an employee earns 20,000, 30, 50, 100, 1.5% of that gross salary goes to the affordable housing levy. The employer is also supposed to match the same contribution. So that is very important. And we as SMEs, as businesses, that is something that I understand we have been doing. And maybe for them that have not been doing so, it is very important to comply with that, because as we shall see, there are some penalties on the unremitted affordable housing levy. And just to give a small history, there was a time last year on November 28th when the court declared it unconstitutional. So for some 3 months, 3 months or so, organizations were not supposed to remit the same. But after March, after the president assented to the bill, now the organizations are bound by the law to remit that and to do it in the specified timelines that are in the law. So there are some other regulations or specifications or guidelines on how to do that. This levy, just like the other statutory deductions, it attracts some relief, only that it is yet to be gazetted. The relief is said to be 15% of the employee contribution, but it shall not exceed 108,000 per year. That is around 9,000 per month. So there are thresholds for that relief to apply, although we are waiting gazettement by the government to have it effective. Like I was saying, if we don't remit that much, we risk a penalty of 3% for every month of the levy that we have not paid to the authority. And we understand that KRA is just a collector, it's just an agent. So it's good to make sure that we remit that by the 9th working day after the end of the month. So as we do the other payee statutory deductions filing, we need also to make sure that we do this for affordable housing. There are some proposed exemptions to this. There are some people who are saying, and rightly so, that they are servicing some mortgage. Some they are nearing their retirement, so they may not need that house. So there are some proposed exemptions that are being worked on, but so far no gazette notice has been issued to that effect. So as we speak now, there are no exemptions that are enforceable, but maybe in due course we should be able maybe to get a gazette notice clarifying the same. The other item is the NHIF, the National Housing Insurance Fund, as we know it. It is bound to change to Social Health Insurance Fund. And the government's objective is to provide a comprehensive health coverage to all Kenyan residents through the SHIF plan. So NHIF still is active as we know it, but now the ministry is encouraging the people of Kenya to continue register for the SHIF because it will be effective from 1st of July 2024. So for the time between now and the time this financial year ends, which is June 30th, 2024, the normal deductions, the normal NHIF deductions will continue, but from 1st of July 2024, now the SHIF rates will kick in, and that means we should be able to have registered with SHIF. Although there's no clear communication from the ministry as to how we are supposed to register for the SHIF, but that is something that we can keep our eyes on and our ears on the ground so that we are not caught flat-footed by this change when it becomes effective on 1st of July. And there are some changes that they are glaring when you compare the NHIF as we know it and now to SHIF that is proposed or that has been already been approved for implementation. All workers now will be expected to contribute 2.75 of their gross salary, and this one has no cap. For those that are not salaried, the SMEs, the mamambogas, the people that are in the informal sector, their monthly contribution was reduced from 500. Now they will be expected to contribute 300 shillings every month. And just looking at the different changes that are evident from the different levels. Previously, someone who was earning 20,000 used to pay 750, but now they will be required to pay 550 under SHIF, and I think that is the only reduction. For all the other tires, whether you're earning 50, 100, 200, 500,000, and even 1 million, what you used to contribute previously or what you are contributing right now under NHIF is lower than what you will be contributing under SHIF. And we are able to note those differences. So the key issue here is on preparations. Maybe organizations need to make proper preparations, even individuals at their level, proper planning for these contributions, because we know this will have an effect on your take home salary after these deductions. So the purpose of this information is just for planning purposes and also for compliance. The other update is on NSSF. NSSF relates to that Social Security funds for purposes of retirement benefit. So in accordance with the third schedule of the NSSF Act of 2013, these changes were made effective from February 2024. And you may notice the difference between what used to be there and now what has been effective from February. The lower rate for Tier 1 used to be 6,000, now it is 7,000. And now the maximum is 36. For the upper limit is 36,000. So this marks a deduction increase. The amount that you are deducted has increased from 360 to 420 for the first tier. And that is for the employee. The employers are also supposed to match that match, which is for 20. So, but the rate remains to be 6% for both the employer and the employees. So Kenyans earning more than 36,000, they have had their NSSF deductions doubled from what used to be 1,080 or 1,080 to now 2,160, which should now be matched by the employer to have a total of 4,320. So these are changes that have been effected. The purpose of discussing them here and now is just to remind ourselves for purposes of compliance, so that we are on the same page on what the law says. This table here is just demonstrating how the changes appear. So for the first tier, which is lower limit, the employee is supposed to contribute 420 and the employer is supposed to contribute 420 for the first 7,000. Then for the second tier, going up to upper limit of 36,000, the employee contributes around 1,740 and the employer contributes the same. So at the end of the day, what the employer should file is 4320 for every employee. That is if the employee pay surpasses 36,000 as their pay. So having discussed all that, we have seen that these changes affect businesses directly, and also they affect individuals directly. So it is for us now to look at the areas that we are yet to comply with, especially for the regulations or the laws that already have been implemented, so that we comply. For the ones that we still have a window, we still have time to comply. For example, the tax amnesty, we still have like 2 months or less than 2 months. If your organization owes KRA some tax amounts for periods running up to 30th of December 2022, it is high time that you may consider to apply for that amnesty so that you are exempted from paying the penalties. And now you can have a plan to pay the taxes, the principal tax due to the tax authority by within the 2 months, that is by 30th of June 2024. So it's also a good thing for businesses to find ways to adapt to these changes, because the tax landscape has been changing over time. So one thing to keep track of the changes is to remain updated on the tax changes that are happening around. Sometimes some changes happen and we think they are not affecting our businesses or ourselves at our personal level in any way. Up until now, maybe you are filing the returns and you realize some taxes also were supposed to be declared and paid. So it's good to stay informed and also to adapt to the changing tax landscape. The other thing that we have seen that needs to be emphasized on is compliance to ETIMS protocols. Like we have seen, if we make purchases that are not ETIMS, they are not generated through ETIMS. Those purchases, those expenses, they will not be allowable for deductibility when we are calculating our income tax that we should remit to the tax authority. And what that means simply is that instead of now having to claim that expense will be part of the income and it will attract the normal income tax rate. So for example, the corporate income tax rate is 30%. So maybe you have bought something or you have incurred a certain expense that ideally should be allowable for deductibility. But now, since you bought that thing or you spent that money through some supplier who is not able to generate an ETIMS invoice, now that will add to what you are supposed to be taxed on. So it increases your tax liability. So it is very important to ensure that we comply with that, because that is the only way we are going to make our businesses sustainable in the changing tax landscape in Kenya. And it's also important to look at the changes that we are seeing in a positive light, because we may look at it as a way to make our businesses not sustainable, of making how we operate becoming quite complex and quite hard. But there are some positives that we can see and some opportunities that we can seize and take advantage of to make sure that our businesses are efficient, and also compliance to us when we do that becomes very easy. It becomes very easy. So this is a journey that we cannot afford to backtrack on, because it is the law. So what it is needed of us is just to plan well, stay updated on the changes, and also where maybe we are not able to comply. For example, onboarding ETIMS, filing the returns in time, handling those statutory deductions. It is important to reach out to experts who can be able to do that. And at this point, John Daniel Partners LLP will be able to work with you through that journey to ensure that you remain compliant. And by you remaining compliant, it means that your businesses are going to be sustainable. And of course, you will not waste your resources paying fines and penalties, or you waste your time in litigations that are connected to unpaid taxes or non-compliance to the law. So at this point, I want to thank you all for having me in this webinar. I want to hand it over to Frida so that if there are questions, we can pick them up. Please, Frida, you can take over.
Thank you very much, John, for that wonderful presentation. Yes, I can see there are 3 questions in the chat section area. There is one from Samuel Mutiso is saying, please provide more clarification on the affordable housing levy relief. I don't know if that question is clear to you, John, or I can request Samuel to unmute and raise the question. And then the other question.
Sorry, maybe I can proceed to first answer that one.
Okay.
So, like I had said, the affordable housing levy, there's some proposed relief on that at the rate of 15%, but it is yet to be gazetted. It is yet to be gazetted. So we are looking forward to that being gazetted so that we are able to implement that. So currently it is not gazetted.
Thank you, John. The other question is from Jeremiah Kibe, is thanking you for the lessons, and his question is about the TOT. He's asking what happens when one registers for TOT obligation and KRA add that obligation after 9 months. After following up, should KRA backdate the date when the obligation was added? And remember, the last 9 months, the obligation was not there.
So that is normally backdated, like is keeping there to the date when the obligation was added. So yeah, so that is the answer. It is normally backdated.
Thank you, Jeremiah. Hope your question has been addressed. Mohammed is requesting if you can touch on the ETIMS exemption.
Okay. Like I did mention, there are some exemptions to what should be transmitted through ETIMS. And one of them is the emoluments, the salary that we pay our staff, the tickets, the air tickets, the imports, because for imports, it is understood that you'll be able to declare them at the point of entry at the border, whether you are importing through the port or through other border points. That should be taken care of at that point. The other exemptions like interest for financial institutions, and the commissioner may give some exemptions to some other expenses or some other transactions as they may deem fit. So any other expenditure that is not included in this list as it stands right now should be transmitted through ETIMS. I hope that answers the question.
Thank you. Then there is another question from Tapkiai in regards to ETIMS. She's asking if I do some supplies to organizations or individuals, will I need to register the business, or I can just register for ETIMS using personal details?
Okay, ETIMS should be the entities, the people who should onboard ETIMS, they are businesses. Not people. For example, myself as John, with my PIN, it is not advisable that I onboard on ETIMS, but if I have a PIN for my business, my small business, I should onboard ETIMS.
Dan has something to say.
Okay.
Thank you, Frida, and thank you very much, John, also for that wonderful presentation. And I think it's a very enlightening presentation. You've done it quite well. Maybe just as a general contribution for the sake of our participants, my name is CPA Dan Chege. I'm the firm's managing partner, and I'm glad to join this webinar, which is part of our firm's contribution to society, trying to make sure that our business community is enlightened, people are informed, and out of that we can be able to develop a good network, maybe even promoting tax compliance, promoting good business practices and all that. I just want to emphasize on what John was talking about, the need to ensure that we are tax compliant, not just for the sake of assisting the government in collection of taxes, but ensuring that we have good business practices, especially on record keeping, bookkeeping, accounting, so that we are able to focus. We are focused on running the business. We are not focused on distractions like fighting the taxman, what generally comes out in the general public. One bit which I've seen somebody asking about, if I can do registration as an individual, I do supplies as an individual. If you look at it, if you are supplying as an individual, you are doing business. If you are supplying as an individual, you are doing a business, and it's good to register the business. And that's why it's good to move away from the so-called carry way of approaching issues. Because if you are making a surprise, say on a regular basis to, say, a school, and you are paid, you are basically doing business. So you need to register, whether you register as a sole proprietorship or as a company. It's good to think about that. Again, if you are under TOT was introduced so that it would accommodate the small businesses, the businesses who are below 5 million annual turnover. But then you also need to make a choice, and make a very conscious choice, a very deliberate choice, whether TOT is working for you or not, because you can opt to be outside TOT. Turnover tax, because remember, this is tax on gross. Suppose you're operating at a loss. Although you are selling, you could be operating at a loss. So it's good for you to receive professional help, so that by the time you are making that decision, you are making it because it's a good decision to remain in TOT, or temporarily to remain in TOT as you work towards making declarations in the normal way, so that you can be able to assess the taxable income and pay the right tax amount. So I just wanted to emphasize on that, and I pray that those who are asking questions can also engage us in our chats and or through email, so that we can be able to address those issues where we can, especially where there are very specific issues that you feel may require maybe more personalized attention as opposed to the webinar. Otherwise, thank you very much, and I really appreciate you joining us. Thank you. Frida, you may proceed.
Thank you, Dan, for that contribution. I can see there is another question from Simon. He's asking, kindly advise what is VAT implication for a business that is not registered for VAT, but the client needs to be invoiced, including the VAT.
Okay, I think Dan mentioned that, and the VAT should be included. The VAT should be included.
Then there's another question from Lucas. Is thanking us for organizing such a session. And then he's saying that he has a registered company with which he does crop farming, such as sorghum, which is seasonal, meaning he makes sales only twice a year. But normally friends ask for his company's account to be able to receive funds for a few jobs here and there. In this case, what is worse if I file nil returns? Maybe Dan, you can help us answer that.
Okay, thank you, Frida, and thank you for those good comments, the questions. Okay, when Lucas is asking about nil returns, nil returns means you don't have income. Nil is zero. If you have income and you file nil returns, you are basically lying to the taxman. And our system of tax administration in Kenya is based on self-declaration. And the taxman by default assumes what you declared is right. So when you declare nil, the taxman assumes there is no taxable income. But then you need to ask yourself, is it really nil in practice? Because if it's not, then you are lying. And the taxman now comes up with that a different approach now, because remember the default is to accept your declaration the way you have declared. But now when you declare nil and yet you have income, then you give the taxman a reason to use the law. Because in this case now you are lying. So you instead of filing nil, you need to ask yourself, because it's very expedient to just file nil, and it's easy to file nil. What if whoever is paying you for your deliveries withhold or had withheld? You might find problems now, that nil return going through. Or maybe the person who withheld might file withholding returns, or withheld some money and file it after you filed nil. In which case now the taxman now again is prompted to ask you, here is some income that relates to you. So you need to think in terms of arriving at the correct amount. It doesn't matter the regularity of your crop, because even if it's once, then if you keep proper records, and that's why we are emphasizing on record keeping. If you keep proper records, then you have all the expenses well accumulated, and then you can be able to determine the right. Because even in yourself, when you are doing the business, before you file the tax returns, you want to have a profit. You don't want to get a loss for your own benefit, even before we think of the taxman. So you need to ensure that you can be able to say, my crop has given me this much, or my crop, I suffered this loss. That's a very important decision for you, even before you get to engage the taxman. So I would really recommend that you get into that approach of doing the right calculations. If you feel you are not well capacitated, talk to professionals like ourselves. And sometimes people fear the fees, the professional fees. You'll be surprised how much you save by just paying a very small amount of professional fees for professional advice. In the long term, taken you and the business. Thank you for that.
Lucas, hope your question was addressed. And then we have Simon. He had asked a question on the VAT implication for a business that is not registered, but the client needs to be invoiced including VAT. Yes, the question was answered, and you need to register.
Frida, maybe I can clarify a little bit.
Yes, John.
Let me clarify a little bit. The person or the organization that should be able to issue an invoice with VAT are the ones that have been registered. So for you to raise that invoice with VAT, even if the client wants that and you are not registered for VAT, you cannot do that. But also the emphasis is on e-teams right now, because if you're able to do that through e-teams, those records will also be very necessary when now you get to a point whereby you are within the threshold, and now the system can onboard you and register you automatically for VAT, so that now from there you can be able to issue invoices with VAT.
Thank you. Thank you, John. I can't see any other question on the, okay. Yes, there is no other question on the chat section. Mark is asking if we'll share the recording. Yes, the recording will be shared later in the day. If you have any other question, please feel free to type it. But in the meantime, I can be sharing something concerning our farm. Thank you for taking time to join our today's webinar. Hope that it was informative. You found it informative. We are John Daniel and Partners LLP, CPA stroke audit firm based in Kilimani. You can reach to us through info@johndaniel.co.ke or the contact provided there. And then we believe in teamwork, integrity, and excellence. We are here to empower you to run your business. Just as it was mentioned, you need to engage professionals. We are here to make your work easier so that you can focus on the affairs of your businesses. So if you can entrust us with all your tax headaches, we will deal with that. Our inspiration is to see you succeed and every other business succeed. And these are the services that we offer. We do bookkeeping and accounting. We also do both internal and external audit. We offer tax advisory and management advisory. Our team is made up of multi-talented individuals who are CPA finalists, and we are also zero certified advisors, and we are passionate about business and consulting. Our practitioners are Daniel Chege and John Guri. And then these are some of the clients that we have served. They are in various sectors, like in the real estate, others in NGOs. We have also worked with the government. We have worked with schools. Yeah, even in the production industries. Our key partners are Zero and WorkPay. We are certified Zero advisors. So what's next? When we onboard you, we seek first to understand your needs, we contract, then we plan and deliver, then we discuss and consult with you. We also develop a closer relationship with you as a client so that to suit you better. Yes, thank you very much for your time. The presentation will be shared in your emails later in the day. Feel free to leave if you don't have any other question.
This is brought to you by John Daniel and Partners LLP.